Market staged a sharp recovery from the day's lows with the Sensex and the Nifty rebounding over 1%. Nifty reclaims the 23,650 mark even as the rupee weakened further to hit a record low of 96.96 against the US dollar.
Hindalco Industries' US arm Novelis delivers a better than expected performance despite disruptions from fires at two of its facilities in Oswego. Management guided for a return to positive free cash flows by the end of FY27. The stock among the top Nifty gainers in today's session.
Zydus Life hits a fresh 52-week high on strong Q4 results. The management announces a buyback of 1,100 crore rupees. Zee Entertainment's ad revenue was hit by West Asia crisis, but ZEE5 turnaround continues for a second straight quarter, while PI Industries tumbled on weaker than expected numbers.
You're watching us here on Markets Forward. Good evening. This is your show where we give you all the key data points you need to get up for the next trading session while tell you what took place in trade today as well. I'm Manglam Malu. With me, Vivek Iyer. Good evening, Vivek. You know, we had a decent trading session. Yesterday, the market tested the higher end of the range and ended at the lower levels. Today, it once again tested the lower end of the range to move higher. What did not change? The weakness in the rupee. But what did change is that the support today came in from Reliance. The last couple of trading sessions, it was the IT pack which was supporting the frontline index. Today, Reliance did well. And towards the end, even the Nifty bank actually picked pace, ended about 0.33% higher. The IT index took a bit of a breather and a backseat. The advanced decline split right down the middle, but there was a formidable headway made by the bulls as the trading day progressed, with advances eventually outnumbering declines by a smidge. But if you look at the crisscross lines, you would realize that there was a fair amount of jostle through the course of today's trading session, with eventually the bulls coming on top.
That's right. What a sharp recovery we saw. You know, we came in with very weak cues. Like you said, US yields actually went ahead and ensured that most of the global markets actually ended in the negative territory. But Indian markets staged a sharp recovery. And one sector that did very well today was the entire capital goods pack. And that was one particular sector that did very well. But here's the lineup of what we have in store for you today. We'll start with the top movers and shakers of the day with Sudarshan. We'll decode while stocks like Hindalco, Zydus Life, PI Industries and Zee Entertainment were buzzing in trade. And last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. But now on to our first segment of the day. Sudarshan standing by the big wall with all the top movers and shakers of the day.
Who would have thought that Nifty at the close would be 40 points higher after opening with a downtick of more than 200 points? And the biggest support came from the Reliance Industries, which contributed more than 60 points and was one of the top Nifty gainers, closed with a gain of almost 3%. All the auto names were higher as well. Bajaj Auto was the top Nifty, amongst top Nifty gainers, closed with a gain of more than 2%. And amongst IT stocks, Wipro has seen buying, closed with a gain of 1%. BEL, despite strong set of earnings, closed down today and was down almost 2%. Some of the stocks that have reacted to earnings, Hindalco was top Nifty gainer, closed with a gain of more than 3%, and it was a strong set of earnings from Novelis. That's the reason stock reacted positively. Mankind too reacted positively to the earnings, and also the outlook for FY27 was good. RB in fact came at the last hour of trade and closed with a gain of almost 5%. PI Industry, it was a disappointing set of earnings. Even outlook is not looking that great and closed with a cut of almost 8%, while Zydus Life closed 11% higher after Q4 earnings. GE Vernova came with the earnings, and following that, all the capex plays today saw buying today, and Hitachi Energy closed the gain of 6%. ABB, CG Power, Siemens, all these stocks have closed sharply higher. Oil marketing companies have seen buying for second straight day after fuel price hike. You can see all the three names, IOC, BPCL and HPCL, closed with a gain somewhere in the range of 2 to 3%. And lastly, some of the stocks that have hit fresh 52-week highs. Vodafone Idea continues to be hitting the fresh 52-week high. Lotus Labs has hit 52-week high. MCX for another day has hit 52-week high, and the last name, Aurobindo Pharma, ahead of its Q4 earnings tomorrow, has hit 52-week high.
All right, Sudarshan, thanks a lot for that. You did speak about a bunch of earnings. Top Nifty gainer today was Hindalco after its wholly owned subsidiary Novelis reported its fourth quarter numbers. The results showed operational improvement, and the company guided for better times ahead. This even as there were fires in two of their plants in Oswego. There are some concerns. Nigel joins in with all the details of what did well and what the concerns are.
Novelis' numbers actually were a little bit better. It was improved on better scrap spreads, though there were a couple of one-offs. Let's run you through the numbers first. On terms of shipments, it was down by close to 12%, but that was expected because the Oswego fire hit production out there. The adjusted EBITDA, though, that's the number you look at, that came at around $459 million, with the EBITDA per ton, this is the adjusted number, came in at around $544 per ton. Remember, it was impacted because there was the negative $53 million from the Oswego fires. There was a negative $27 million due to the tariffs. But it was offset because $41 million of flood insurance is what they recovered. Remember, the flood was in 2024 itself. But there were two problems. One is the fire, they had earlier guided that it will impact the free cash flows by around $1.3 to $1.6 billion. Now, that number has swelled up to around $1.7 billion. The second factor is the net debt upon EBITDA. That swelled up to around the 23-quarter high at around 4.1 times odd. On the plant-specific guidance, they expect the New York plant to restart in the next few weeks, which is sooner than expected. They're also expecting the full commissioning of the Bay Minette project by the end of this calendar year. On guidance, they also went on to say that they expect to return to free cash flow positive number by the end of FY27. Put everything together, the positives outweigh the negatives, which explains the stock price move.
Well, thank you so much, Nigel, for joining in and giving us all of the key details why Hindalco was higher in the session today. To take this discussion forward, we are now joined by Mayuresh Joshi from MarketSmith India and Shrikant Chauhan from Kotak Securities. Thank you so much, gentlemen, for joining us. Good evening to both of you. Well, Shrikant, let me come across to you first. We started off the session on a very weak note, taking very weak cues, but managing to end with all of the indices trading with gains. Where do you see the Nifty headed from here on?
Vivek, good afternoon, Mangalam. So, see, the market is consolidating, and it has been consolidating since the last almost 4 or 5 days. It is not breaking the level of 23,200 on the downside. It is not crossing the level of 23,900 convincingly on the higher side. And the way there are flows like, let's say, currency or crude, I'm of the view that market is going to spend time in the range only. In case if it breaks the level of 23,800, then there is a possibility that we may see the levels of 24,200. So in between, I'm of the view that we can see good amount of stock-specific action in the market. So in case if there is any correction, then also we should look for taking some long bets in the markets with a stop loss at 23,200. So in case market breaks the level of 23,200, then we can expect next level of maybe 22,800. But till then, I am of the view that we are going to see good amount of stock-specific activity in the market.
All right, good amount of stock-specific activity that will continue. Shrikant, I just wanted to ask Mayuresh about Reliance. Mayuresh, typically this is the period where you start seeing the stock move, and this is ahead of the annual general meeting that happens sometime in the middle of June. Do you think it is that, or there's something more that is taking place in Reliance right now?
Afternoon, Mangalam. I think it's a combination of both, in my opinion. I think the markets always get enthused as the AGM date probably comes nearer. But to a certain extent, the expectations in terms of how the refining margins will move is something to be watched out for. Obviously, I think the downstream petchem product pricing, with how the delta spreads have been across product value chains, are obviously, I think, very, very volatile as we speak. But I think there is every bit of hope that as the de-escalation happens, the second half of quarter two onwards, I think numbers should be relatively better, both in terms of oil and gas as well as the refining of the petchem side of the business. When it comes to the retail-oriented businesses, I think they're on a steady state and expected to continue doing well. So I think a combination of all these factors working in favor of Reliance.
Okay, thank you so much, Mayuresh. But gentlemen, do stay on. Remember, the shares of Zydus Life hit a 52-week high after beating street estimates in Q4. The board also announced a 1,100 crore rupee buyback. Ekta joins in with the report card.
Well, yes, Zydus Life was in focus on the back of positive management commentary coming in from the company in their conference call. So, for example, a couple of key takeaways. The management has guided for US revenue base of over $300 million per quarter with single-digit FY27 growth. Key US growth drivers include cancer drugs such as Rolvedon generic as well as Copaxone generic. US revenues are estimated, in fact, to be at around $1.3 to $1.4 billion. India is expected to grow, aided by oncology as well as the GLP-1 or weight loss drug portfolio. International business overall is guided to grow around 40 to 45% in FY27. Specialty is expected to be a key focus for them going forward. So the company has said that they do have some launches in the US as well as a launch in China. Now, the portfolio mix is improving and they're expecting higher contribution from other segments such as biosimilars, specialty, as well as their medtech and CDMO space. Now, a couple of brokerages have written on Zydus Life. Jefferies has a buy call, target price of 1,200 rupees. According to them, Q4 performance beat estimates across segments. New launches are expected to drive growth. FY28 EPS estimates are raised by 14%. JP Morgan, neutral call, target price 1,050. FY27 revenue growth guidance remains strong. Margin expected above 24%. Pipeline visibility remains healthy as well.
All right, thanks a lot for that. So that's about Zydus Life. Mayuresh, do you like Zydus Life?
Strong numbers, Mangalam. And again, I think if you probably look at how the management has probably put forth the pipeline itself, the kind of FTFs that are expected to come through, they've got around 9 approvals in the quarter gone by, 26 approvals for the entire annualized year last year. And they've got a very decent pipeline going forward as well. Now, the India business, along with margins expected to continue doing well. North America, in a similar fashion, should probably continue, as I said, in terms of new launches expected to do well. And the wellness part, the Zydus wellness component, which is on 20%, I think that is showing significant signs of relative strength as we speak in the areas and the operations that they operate out of. So overall, both standalone and consolidated, I think the numbers should probably hold up. The ratings and rankings look extremely strong as we see it in markets with India. Anybody holding should continue to be satisfied.
Well, thank you so much for that, Mayuresh. Well, Srikanth, let me come across to you. Zydus Life, your view on that, Street was divided, especially in terms of Q4 being a peak quarter post-Revlimid, but, the stock's done well, management commentary strong. How are the charts looking on this particular name? And within the pharma pack, where does the preference lie? Or will it be the larger cap names or some of the mid-cap names?
So Vivek, while looking at the technical pattern of Zydus Life, one thing is very clear that the stock had started pullback to the recent sell-off that we witnessed in the stock. It was around 1,400 levels. From there, all the way it fell to 800. Now it is pulling back to those particular losses. So maybe we can see the levels of 1,250, 1,300 in the near future. That's my view. Technically, the stock is very strong. But if we have to go through with, let's say, a few more stocks from the pharma space, then in that, 2 stocks showing a lot of strength. One is Sun Pharma, which is currently trading around 1880, 1890. There, if we see the technical pattern, then the stock had spent nearly 2 years within the range of 1900, within the range of 1500 and 1900. So on the dismissal of that, we may even see the levels of 2300. So on that particularly, we are bullish. We also like Wockhardt Pharma. There also the stock is forming rounding bottom sort of formation. And gradually the stock is again heading for the levels of maybe 1850 or 1875. So I think these 2 stocks showing clear strength, and we should be buyer if there is any correction in the market.
All right, should be buyers if there are any corrections in the market. That's on those 2 stocks. But let's look at PI Industries. That too plunged about 8% today after its 4th quarter results turned out to be much worse than what the street had feared. Ria joins in with the details of this one. Ria, what went wrong for the company during this quarter?
Well, yes, it has been a very weak quarter for PI Industries, well below the estimates that the street was working with. Revenue declined by roughly 12%, EBITDA down nearly 26% versus an estimate of a 19% decline. Net profit also tanked by 39% versus estimates of just a 23% decline, and margins also contracted by 400 basis points to just 21.5% in this quarter. The full year performance was also quite weak for the company, with revenue and EBITDA declining in line with the estimates that the street was working with, but the net profit that tanked around 27% compared to the previous year. Margins also contracted by around 200 basis points to 25%, but this is in line with the guidance that the company had given, and they have said that a favorable product mix this time around has somewhat supported margins for them. In terms of the specific segments that the company operates in, the Agrochem export segment declined by 19% on a year-on-year basis, with the volumes declining by roughly 14% due to a high base effect and also due to the contraction of the global Agrochem industry as a whole. Domestic revenue also declined by 7% compared to the previous year, with the volumes declining by around 1% on this front. The pharma segment did perform quite well, going up by around 40% compared to the previous year. And remember, this contributes roughly around 6% to the export revenue of the company. But overall, it has been a weak quarter and a weak year for the company, which is why the stock has tanked roughly 8% in today's trading session.
Well, thank you so much, Ria, for joining us and giving us a complete perspective of what dragged the share price of PI Industries lower in the session. Mayuresh, let me come across to you first. It's been a company, that's had dependence on a single product from a single customer for quite some time, and that's clearly played out in the last couple of years. There has been some diversification. What's your view on PI Industries? And within the agrochem space, where does your preference lie?
Afternoon, Vivek. No, I think you're absolutely right. And that is where I think the risk component comes from, where either the client concentration is high or the expectations in terms of depending on a very few supply chains might actually impact your operating performance as well. And therefore, I think the kind of numbers that are probably put out were put out by PI Industries below par. Q1 might be equally tough with the West Asian crisis going on, what probably happens with a lot of the supply chains, and therefore what kind of margins are we probably expected to see. So I think it might remain a little bit subpar as we speak. For a lot of agrochem players in general, I think our own sense is that it's a wait and watch approach. Obviously, I think a couple of names that we are keeping on our radar, Sharda Cropchem, where I think the entire business is more forward integrated rather than backward, specifically when it comes to its European operations, is one stock that we are probably monitoring as we speak. And obviously, I think the expectations largely is that the approvals that probably come through and the input cost, how does that probably lay out in terms of either repricing or taking a hit on your numbers itself. So wait and watch, but something like a Sharda is something we're monitoring very, very closely.
All right, we take that point. Thanks a lot for that. Let's talk about Zee. Those shares were lower in today's trading session as well. After the company's ad revenue was impacted by its West Asia crisis, the turnaround of its OTT platform continued for the second straight quarter. But the company did report an EBITDA loss and the net loss as well. Devyani joins in with more details.
Zee Entertainment has seen a sharp sell-off in trade today, and that's primarily on the back of a weak set of results that were reported by the company during their board meeting yesterday. Now, ad revenue dropped 4% year-on-year due to March softness on the back of the West Asia crisis, while subscription revenue, that was up 4%. Now, ZEE5 has seen a second straight quarter of EBITDA profitability with revenue up 71% year-on-year. Now, other sales dropped 47% due to the weak movie business of the company, and as a result, revenue was down 7% on an overall basis, on a year-on-year perspective. Now, the company also reported an EBITDA loss of roughly around 270 crores. Now, that was largely as a result of a change in the amortization pattern for movie rights inventory, which led to an accelerated amortization of roughly around 408 crores that was charged to the profit and loss this time around. But adjusted for that accelerated amortization as well, EBITDA would have come in at 140 crores, down sharply by roughly around 51% on a year-on-year perspective, with elevated ad and publicity expenses hurting profitability this time around. And the company, as a result, also reported a net loss of 102 crores versus a profit of 188 crores that was reported in Q4 of FY25. All in all, a weak set of results, and the stock is clearly taking a beating for it.
Well, thank you so much, Devyani, for joining us and giving us a comprehensive reason as to what dragged Zee Entertainment lower in the session today. Srikanth, how do the charts of Zee look? Of course, the stock has seen a significant correction from the peak that it enjoyed a couple of years back. Now, within the media space, within the channel space, some of the listed names like Zee, Sun TV, where does your preference lie?
Yeah, absolutely. I think the way the stock has fallen and it has formed a series of lower top, lower bottom, one thing is very clear that till the stock is not crossing the level of 100, we are going to see range-bound sort of activity. See, like already the stock has seen its worst when the stock was around 68, 70 sort of levels. So I am of the view that worst is over, but for the time being, stock is like going to remain in the range. That's my view. And on the dismissal of 100, we can expect trending activity. Till then, close to 80, 78 sort of levels, we should be buyer in the company. We can get some trading moves in the near future.
All right, we can get some trading moves in the near future. Mayuresh, just before I let you go, Carousel India, that was another stock which is up 11% today. Good performance coming in. The management's been guiding for, improved performance from their quads division, and they've increased the capex out there as well. Do you track the stock?
Absolutely. I think they were expanding their capacities. And therefore, I think I did not have a chance to look at the numbers, but the 9-month performance was very encouraging for Carousel. The expanded capacities, no doubt, are probably going to not just bring in volumes. but better efficiencies as far as the PLN is concerned, but still need to take into the granular details of the quarter gone by.
Well, thank you so much, Mayuresh, as well as Srikanth, for joining us, giving us your view on the markets, individual trading stocks, as well as sectors that we've been tracking quite closely. But with that, it's time for a short break. We'll get you the top corporate voices, along with the key market events to watch out for on the other side.
You're watching us here on Markets Forward, a day where we saw sharp recovery from the lows, but we had a lot of corporate voices who joined us on the channel today as well. Let's start with RITES, where the CMD told us that the company is seeing a limited impact from the West Asia crisis. They guided for a double-digit top-line growth in FY27, total order book expected to cross the 10,000 crore mark this fiscal.
But BLS International Services is seeing short-term impact on its business due to geopolitical tensions, the company's management said. While core demand trends remain strong, margins in the visa business are guided to grow at 20 to 25% over the next few years.
And we also had the makers of Glucon-D, which said that unseasonal weather, this is Zydus Wellness that we're talking about, unseasonal weather patterns impacted demand at the start of FY27. The company reiterated its focus on delivering double-digit revenue CAGR going forward ex seasonality, and they are remaining confident of sustaining their strong growth for the Comfort Click business that they acquired on a constant currency basis as well.
And before we wrap on this edition of Markets Forward, we bring you some key market events to watch out for. Ria is standing by the wall with all the key events to focus on tomorrow's trading session.
Well, yes, first up in terms of economic data, we have the GDP numbers coming out from the UK as well as the PMI data coming out from the Eurozone. And in the US, we will be watching for the initial jobless claims as well as the minutes of the FOMC meeting. Back home in India, the earnings season continues. We have LIC, ITC, GAIL, Aurobindo Pharma, Nykaa, Page Industries, MTNL, Ashoka Buildcon, Honasa Consumer as well as LG Electronics among that list. And in other events, PM Modi is also likely to chair a full Council of Ministers meeting on the 21st of May.
All right, Ria, thanks a lot for that. So those are a bunch of events that we need to track for in tomorrow's trading session. With that, Vivek and I take your leave on this edition of Markets Forward.
Thank you so much for watching. See you tomorrow at the same time.